Are we live right now?
Yeah, we're live. I just want to see on YouTube.
Is the message, you want to try the message board and see if it's live on?
Okay.
Great. Hopefully that works.
Right.
Let's see if we can give it a minute just to see if, let's see here.
Let me go to the old one.
Let's see.
Okay, 3 people. Okay, you guys back? Okay. Technical difficulties. Yeah, it's about to happen.
Technical difficulties.
Okay.
All right, looks like we're getting some people back.
Okay. Let's see.
All right, I think we could start. Yeah.
Yep. All right, good to go.
All right, hopefully we can get back some of the people that we lost. Let's go back to, I'm not sure where we got cut off, but one of the names that we're seeing your way in is in on Semiconductor. And we're seeing that this is the second time in about a week and a half we're seeing some call buying here. These are the 40 calls in May. Looks like 8,000 were bought here. They bought them here in the morning with implied volatilities going up. We see that, and they kept buying them. They bought another tranche over here, and they've been buying them since, but the vols come down as the stock is traded back up. So this is, one of the semiconductor names that have been doing well. And I think all of them, when you talk about paying $1.92 trillion to build out the EV goal and what Biden wants to achieve, these people are not going to be working on EV. They will be to some extent, but not like they will be in the Midwest. They're not going to be in New York. They're not going to be in California building windmills and whatnot. They're going to be in the heart of America. And so I think there'll be new cities built wherever this infrastructure is going to be built, right? Whether it's wind power, whatever they're going to build. And all of that is, going to be, going to take a lot of semiconductors. Everything that's built these days is somehow connected to electronics. And so semiconductors are going to be bid over time. Someone came out today and said they think the next 2 years is the golden age of semis. We've talked about that in the past. Some of them have been weak with this chip shortage. Ultimately, I don't understand why they're not super bid, right? Because maybe it's just money being taken out of these things, just because it's my belief that these chip stocks, when they trade well and when people buy them, they're to the moon. So it's one of the sectors I'm waiting for it to heat up. But it's been under pressure because of the chip shortage. Right. In this ON, we're seeing a buyer again for the second time in 2 weeks. The 40 calls paying, let's call it right around here, as a target stock price. Why would somebody be buying that? They've got to be thinking somewhere in the 48 range. Okay, 48 range gets you that strike. So 48 as a target stock price. If we go to look at the stock, I was showing you that this stock looks great. I mean, this stock just is straight up here. It's been working well. And then you got this, let's just call it somewhere right around here. We're going to take this gap. So let's just call it 36 for now. 36, It looks like it popped down here for a day and came back. And up here, you have this 42 level, approximately right around 42. So they're buying the 40s and they're paying 3 and change, and we thought somewhere around 48. It just so happens, just looking at it, which is interesting, 36 and 42 is 6. 6 plus 42 is 48. So again, that symmetry that we're always looking at is interesting. Now, why it looks like a great stock, not just because of the setup, but what happened here is trying to show you earlier. Let's look at it here. We have talk about MACD diversions, which I tend to look at for toppy names. And this is a high price. So you have this long bid chart here. There's a high price here and there's a high MACD. So that coincides. Then you get a new high price and then you don't get this high MACD. So the acceleration or the power that this move had here is a little bit weaker than this move. And so you're expecting some downdraft here. So you're looking for that. Okay, is this the top in, ON Semiconductor? As it goes down and it keeps popping up, it pops up again here to 42. It's still a MACD, a lower MACD. So the pressure is being released as far as the way it's being bought. And you also see an RSI diversion as well. So it's supposed to be weak here, but you can see that the stock is actually not that weak, right? It's actually not that weak. It trades back to the high here, bounces off 36, trades back to the high again. This sort of negates this action right here. What you're seeing here over the last month sort of negates this diversion. So we have this diversion here that is, let's put a box around it. I like these boxes now. We have this diversion here that we're looking at. Okay. And we're saying, okay, it looks toppy, just so the eyes can see it. It looks top. That's a diversion. But then we have this sort of what's playing out here versus what's playing out here is saying, hey, we're taking the pedal, we're taking our foot off the pedal here, but the stock is still kind of hanging. And that's a positive development. So you got this development of this flag with a MACD diversion that was rejected. And it seems like an interesting setup for calls here. I don't know a lot about ON Semiconductor. I actually have to look at this name. And now I'm very intrigued because of this chart. But the next move, if this is correct and this sort of breaks out, the next move is to actually round this MACD back up and you get a breakout here at 42. 36 and 42 is $6. $6 plus 42 gets us to 48, okay, which is exactly where, this options purchase for earnings, okay, for earnings, that's what it's telling us. So things are matching here. I'd like to see what ON Semiconductor, what part of the, who their clients are and where they make their money. It'd be interesting to really see and dig into that a little bit. But this looks interesting. It's the second time in, I would say, a week and a half that we saw call buying in ON Semiconductor. So this is for sure on my radar as something that looks great. You got a chart by itself, standalone by itself, looks awesome. And if you asked me to pick a level, I would have picked 48 by itself without even, I would have just said 36, 42, 36. This is 6 points wide. If it breaks through, I'm going to add 6 to this, 42 plus 6. So just on its own, it stands alone. And then when we have the 40 calls being bought, corroborating our 48 target, and that's a 48 target. So now we have two parts of the elements, and the next is going to be the story and figuring out, why would it be exciting right now? Why is this semiconductor holding up as opposed to the other semiconductor? It's probably like an AMAT, which is doing well here, probably supplying to the build out of semiconductor factories or the resupply is my guess. Because the other ones that are facing, consumer products, like we talked about, this is AMAT consumer product facing, like an AMD, has had some trouble, but that could be simply versus Intel, which is trading well. So there's a lot going on in the semi space. Taiwan Semi's been not so hot. We saw some trades looking for sort of 110 to 120 range for the next month and a half. This is the type of it's a puzzle we're trying to put together, and we're trying to figure out what are the hot spots within this puzzle, because Taiwan Semi, AMD, which were the leaders, have been somewhat weak. Intel's a little bit stronger. We have AMAT very strong, issued a buyback, and and they supply some of the resupply. They're gonna be helping with the resupply. So ON is something for sure that I would put on the map that I think is interesting.
Cool. Nice.
What else? What else we got?
Did you see that Apple got upgraded today by UBS, I think?
I did. I saw the Apple upgrade. You know what was interesting about the Apple upgrade? Was interesting was that they added this optionality with potentially Apple entering into the car market. So you like to see that. I think we're talking about options as a product here, but analysts are also thinking in terms of options and probabilities and odds. So how much is, if Apple decides to get in, if Apple decides to get into the car business, okay, it looks like there have been rumors in the past 3 months that they are, but if they decide, how much is it worth for Apple? Well, it might be worth $40. Okay, so $40 is what it'll be worth per share. Now they're saying they're giving a real option value for Apple as $14 a share. So I'm not sure. I'd have to read the report. I'm not sure if $14 per share is discounted by a percentage. So if Apple enters the market, the car market, it's $40 if it did it today. But there's only a 35% chance of it doing that. Oh, okay. So 40 times 35% is about $14. So this is how, again, like you have to, they're thinking about it in that way, probabilities and odds. So you can look at it, I think it's interesting. So once you establish exactly what they're thinking, but they say $14 a share. So we're just going to take it at face value that if they make an announcement, it's about $14 a share. So if you take a look at Apple and you think, a lot of times you don't need UOA, because in Apple, it's hard to always identify exactly where UOA is. But, you look at Apple and you say, okay, the high here is 145. Okay. It's come back down. It's really not much wrong with this chart. It's a natural pullback here. I kind of see a little bit of a channel, like my eye is sort of pointing to something like that. Maybe it's just pointed to what I'm saying. That is, you can use I'm sure there's parallels. I tend to look at it this way. So I see this sort of channel developing here. We have this, see this gap between the 50-day. It's sort of narrowed a little bit here. This is a lot of work. The MACD has come all the way down. Okay. This has come down, but it's still trading fairly well in some larger channel. If we're going to get, without autos, if we're going to start climbing back and we can get to say 140, try to test those highs again, you're going to need a good market. For Apple to go up, this would be a 20% move, or 18% move back to like 145. For Apple to do that, how much is that? From 145, that would be 21 points. Yeah, it's about 18, 19% move. So for Apple to do that, you are going to need a very good market, right? The market's got to explode. I don't think Apple can go up 18, 19% without the S&P 500 going up, 5%, 6%, 7%.
Right.
So, and then how long does it take to do that? Well, it dropped from 145 to 120 in 2 months. There's obviously talk about China and chip supply and chip shortage and how that's going to be affected. But I think that it's important to sort of frame this, get 145, and then, remember, we got this $14 in our pocket. $14 in our pocket, that could be the event. If something happens, if they make an announcement, then wow, it's a $14 bump. I wouldn't necessarily look for this earnings. We haven't heard a lot of chatter going into it. The last chatter I heard was probably several months ago in Apple that they'll get into the car business. So I'm not sure. Usually when Apple's getting into a new business, they'll send out, an e-postcard saying, hey, come to this event. And they'll have like some picture, some mysterious picture where everybody starts guessing what's the new product. And, usually they have that in the fall. So, maybe during the iPhone or a revamp, maybe they're looking at September, October. So I would look at, say, September to hopefully, because you're trying to play not just that Apple might trend higher or go up. You're trying to play that Apple's going to make an announcement to get into this EV business. Now, one thing I think about is, the government is about to spend $2 trillion on EV. I think Apple wants a slice of that. They want a slice of anything where the government is the big customer and they're just spending money, and they want all the companies involved. That doesn't mean they're going to do it at the time that the government wants or that we want, but it seems to me that they want to be in the car market as well. I don't know in what capacity or what space. Maybe it's just a software. Maybe they could actually sign up other like a big GM to manufacturer. But clearly they're probably working on some sort of software. I've been hearing the Apple software for 12 years now. So I would say clearly they're doing something there, and they spent so much on R&D. So if I'm looking at September and I'm trying to say, okay, September options, if it can get back to 140 just on its own merit, just because it's Apple, the market's trading higher. And, I'm going to throw in 145, 140, 140 plus 14. So 154 I throw in there, and voila, we get the 130 calls at $7. That would be a good trade for us to make, thinking that Apple can get to 154, and $14 of that will be some sort of announcement. And you have, another $17 of just the market sort of moving back up. So can the market get to 154? I think we'll need something with an EV software car announcement from Apple. I don't think that happens in the next earnings. They tend to do this outside of earnings, like in June or September. And so I would go out to September if you like Apple and you're concerned about the market. The 7 calls, 130 calls, $7 is a good trade. Something interesting to look at. That's how, if you wanted just to develop a trade because you see some UOA and you've been watching things and you look at things, that's how I would develop a trade. The edge is going to be in, the fundamentals, which I don't think we really have that much edge, but I think in the combination of fundamentals plus technicals plus using this board to determine the right option, that's where on your own, that's where you'll get close to having a viewpoint the way the top guys in the world think, right? You're not going to, I doubt anyone's going to be building 30 models over the course of a year, outdoing the Harvard graduates at all these hedge funds that are just crunching numbers all day and doing a lot of things outside of business. It's going to be difficult, but by combining the stories and some of the research that you're reading, your technicals and your process around these technicals, plus having this tool to sort of guide you on which one is the right one on a risk reward basis, that's really how you're developing ideas. So, we've been talking a lot about developing your own ideas and figuring out new strategies to play names. I know I've been getting a lot of questions lately. I guess more people coming on, asking questions. We introduced a Tesla trade, which I guess somebody has a question here. Did a trade on Tesla using the strategy total got 100% run in a couple of hours? There you go. So,
nice.
These types of things, let's talk about why these things work, by the way. And when there's been a lot of questions around these types of trades. And, I think that it's important to understand that in particular, that trade where you're selling a put and you're buying a call spread, what you're doing is, let's look at Tesla again. Let's look at what we were looking at there. I think there's a lot going on, and again, I try to break it down into little bits, try to give you the whole picture. So here's your picture of Tesla. I'm not going to know anything more than I probably know less than someone that is focusing on Tesla every day as far as fundamentals go.
Right.
Okay. But in technicals, I can look at this, and again, we're just going to frame it quickly. I'm looking at this, the 500. I'm looking at this 400 range. Here's clearly something over here at 560. It bounced here as well. We have this 700 making its rounds here, and then we have call it 900, right? So what we were thinking about was this level we have this. We're talking about an ABCD. We have this coming down up here and then potentially straight down, which leads us right to about 400, 4.25. So you have this structure right here, this ABCD, within this bigger framework of different marks. And what I'm thinking about is, okay, I'm not sure I want to be long Tesla right here. Yesterday was in the 600. Breaks this level and it starts trading down this way. Excuse me. Breaks this level, starts going down this way. It's going to go down to, potentially down to this level here, which I'm concerned about. So how do I get long Tesla? how do I get long Tesla over the next couple of months? And I like the name, but I don't like it through, say, a new high right away. I like the name because I think if this move negates, then this potential move down and this disappears. Now we have something that could actually trade back up. How much could it trade back up? Right. Well, now if this gets negated, this sort of downside move, and this was the low, then you have this 550 to 700, and then 600 plus, this is 150, 175, 600 plus 175 gets you closer to 800. So you have this developing here, and this would have to break the 700 level. So these are all things I'm thinking about, possibilities and what's happening. But at the end of the day, I'm thinking 500 should be somewhere, should be a level where this thing stops. 400 is a level that I'm concentrating on because it's a gap, and does it want to like hit? There's a lot of supply and demand that was exchanged right here, and so that's a little scary here. So how do I get long the stock and be able to stay in the stock without getting downs and ups, getting faked out by all the ups and downs that are happening each day? And you're looking for this strategy to sell puts where you're going to have to get long somewhere. So I'm going to sell puts where I have to get long somewhere, which is probably, I'm going to take a shot over 2 months. This might happen look, it could happen in a week, it could happen in a day, but it's likely with so much activity on the downside, people buying puts, buying call, it likely takes another month or so if it's going to do this. So I'm looking for somewhere around buying this thing at, let's call it 500. Right? If I can get 500.
Yep.
Right. And then on the upside, I want to sort of play somewhere around here. Now, because we have these people stuck up here, it's likely to slow down somewhere around 800. So if I can do a play where I'm looking at this range, forget about this range right here, it seems to me that I would actually like to play, how can I get some leverage here without just getting 3, 4, 5, maybe even 4 to 1. It's expensive out there. So, if I look, if this is what we're looking at, then I could start looking at how I want to play, this type of trade. So yesterday we were talking about selling some puts in May. I believe it was May or June. Do you remember? I don't even remember what we said yesterday, but selling some puts in May and buying some in, let's see, the 720, 780. So we were looking, I believe, at the 720, 780. So that is approximately 720, 780 is approximately, what's that? 16 bucks. Okay, $16 here, and selling the, I believe we were selling something in maybe the 450 range, 500. So probably somewhere, maybe the 500s. Maybe we're selling the 500s. I think it was the 500s. So say we sell the 500s here at 13. So we're paying $3 for that trade, and I'm getting $3, and again making the same. Yesterday we had sort of an 80 wide call spread. 720 to 80 is 80 points, paying 3. So 77 divided by 3 is 25.66 or something like that. So this is what, again, it's similar type of, it's the same thing. Now, I because yesterday I think we were saying, I think maybe it was $1.75, and now it's 3. So, or it was 3 yesterday again, but we must have different strikes. So the stock's up. Go ahead.
Priya is saying, so 720, 800 call spread, 450 puts for $3.
Oh, 450 puts.
Yeah, and it's now $9. Yeah.
Yeah. So there you go. So the reason why that works. So that's how it worked. Okay, that was a trade we said. That's how it worked. Now, why does it work well, and when does it work well? I think those are really the questions we want to sort of. That's really the questions. Why did I pick those strikes, and why does it work so well in certain scenarios? Well, the first scenario that I'm looking for is a stock that has gone down. Okay. I'm looking for a stock that has been under pressure. Okay. I'm not looking for stocks that are really going up so much, right? Because stocks that are going up, they can reverse, come down, and then you're stuck there. So I'm looking for stocks that have gone down. Now, stocks that have gone down, hopefully they've gone down quickly, right? Because the volatility goes up, right? So volatility goes up when stocks go down. Perfect example, we talked about the Viacom stock going down. At some level, it traded, 40 something. At some level, there's some value still in Viacom. Forget about what's going on. Some guy blew up and everything down, but there's some value in Viacom. Where is that value? Where would you feel comfortable getting long? And it may not get there. So you don't want to say, well, I'm only going to buy Viacom if it gets to 35, and then it never hits, and then it literally goes up 20 points back to 50% of the move down. That would not feel good. You say, I could have bought Viacom 45. Why was I messing around for $1? So it's important to understand that the first thing, you want the stocks to go down. Second thing, you want the implied volatility to go up. In this structure, we are selling one put, we are buying one middle call, and then we're selling the outer put. So when volatility is high, those outer puts go up a lot. And especially when the stock goes down, like a Viacom or even this Tesla, when it starts going down and people are looking at the downside, they're willing to pay up for those downside puts. So what we're trying to do in this scenario is almost go against the grain, go against the fear of the puts, but also there's a lot of people that are the greed. The greed is to buy the upside calls in Viacom, and they're willing to pay because the stock just dropped 60. It'll go back 20, $30, and then I can make a lot of money. So that greed to try to buy those way out of the money calls is there. So people are buying those. So what are we doing? We're selling those puts and we're selling those calls. And if you get 1 or 2 days, even after a week goes by and nothing really happens where the thing shoots up or down in a big way, then the volatility is going to come in. It might even be, in this case, in Tesla and in Viacom, it happened overnight. The volatilities come in. When the volatilities come in, the options that get hurt the most are these way out of the money options. Okay, so you're going to make some there. Sure, you're going to lose some in the at the money option. Okay, but you're really going to, those way out of the money options, it almost becomes really difficult to win by owning them. So you're short them, so you're in a good position. So by doing that trade and the volatilities come down, if you do get a bounce back, even small, that trade can go from a $3 to $9 because you're going to get a lot of the direction on that middle option. It's going to decay a little bit, just like the other ones decay. So it's going to go down a little bit, but you're getting a lot of direction on that. And then on the way out of the monies, the volatility comes down. And volatility does affect these out of the money options on a percentage-wise basis in a big way. So volatility coming down really hurts these way out of the money options. That's what you're playing. And so that's why I say when the stock's down, that's when you could start looking at these things. The clear thought process is that you have to want to own the stock. It's not like you just want to do this and say, I want to do this on every trade and every stock that's moving up. It's great if the stock keeps going up. If the stock goes down, you're basically long the stock at your put level. And you're going to have to stick around in there for a while, and it's going to tie up some capital. So you got to really want to own the stock, and it's something that I think people feel more comfortable with. Something like a Viacom that was trading 100 down to 45, and now you can sell a 35 put and say, okay, at 35. It's still got Paramount Plus. It's still, it got a business that's starting to really go up, and that's where I feel comfortable. So I think it's important. Now, the last thing I would say is you can start playing around with skew and looking at skew and saying, okay, well, I really want to see, in this case, maybe the skew to be really high, and that way I can actually sell those. Skew high means puts are better bid, so I could sell those puts. Happy to sell those puts, and then the calls might be lower, but when you have skew high and implied volatility high, those calls might be a lot more bid than normally as well. So you got the skew going for you and the implied volatility. So that's why I'm looking at some of these trades in the Viacom, in the names where this guy blew up. It's a scenario that doesn't, Warren Buffett comes in once in a lifetime and he sells puts. It's similar to that. It's similar to that. But for most of us, we also we don't just want to collect the money, and that's okay. That's one way to do it. This is just another strategy where I'll take that money that I'm getting and I'm going to try to play it because I do think I'm going to bounce back. And if I get any bounce back, I get that leverage, and that's what I really want. So this is something that I think people have been interested in. The key component is that you really have to want to own the stock. And I think most people feel most comfortable wanting to own a stock when the stock is down so much and
Right.
it's a good stock. And we know the reason why it's down. It's not down because the companies, we know that the stock is down because somebody blew up. That's different than, oh, earnings were really bad, or the story is different. So those are different spots on when you would kind of use that trade. People ask me, would you use that trade in Facebook or Google? And my answer is, again, let's look at, so this is Tesla. We went through Tesla and sort of how we picked. So I picked the 720 to the 800 because of what I saw here. So we saw that a little bit. And then, by the way, you're using the new options chain to help you, right? This is where the guy, if the hedge funds are going to buy puts, this is where they're buying them. So I want to be sort of in the shaded area selling. I want to be selling a little bit here, selling a little bit here, and maybe selling even a little bit down here. Okay, so I want to be in the selling puts in it's the downside of this thing, but I mean, visually, it's the upside area. I want to be selling puts here and in the dark shaded area. And in my call spread, I want to be buying. You see, I picked the 720 calls to buy right in the heart of where they would be buying. And where am I selling? I'm selling in the shaded area. So I think that's important as well. That's why when I put this remove shading, when I click on the shading, you can sort of, I want to be buying in this area where they buy, but I want to maybe sell somewhere in the shaded area. I want to be selling somewhere in the shaded area. Okay. So that's how you use the options chain. Now in Tesla right now, the sentiment, this right here, this is skew. This blue right here is telling me that it's bearish, which means that skew is low, which means that that it's bearish. The 3-month sentiment is bearish. That means skew is high. So that means that the puts are better bid. So that's what I get from here.
Right.
Okay. So
Nice.
that's sort of like where I'm looking at and what I'm trying to see and look for and how I'm choosing it. But I think the shaded area and inside the unshaded should sort of give you some areas of interest where you should be thinking about these call spreads. Or if you could do it on the flip side too, if you're going to think about trading it lower, you can, buy a put spread and sell an upside call. So all that is, it's that one trade where you're doing a spread and you're doing the outside the soul put or the soul call.
Okay.
All right.
Great.
Now we can look at so we can look at, just because people asking about doing the same strategy in Google. Right. For example, Google. So in Google, the stock is already up. So in this one, I may just not mess around with the puts, because look, if it drops here, there's a ways down here. So, I'm always trying to look for situations where, again, the stock is down. This stock, we talked about it yesterday, looks fantastic. Stock's up again today. And, I think that calls, or if you wanted to cheapen it, call spreads, because the calls, I mean, it's a 600, what is it? $1,200 stock. So, it's $2,000 stock. Sorry. So the options are, they're not cheap. So if you're looking at May options, and it's going to cost a pretty penny. The 2130s are costing you $60. I mean, that's a lot. That's a lot. Look, this is only 500 options, but this is a big trade. So this is 500. This looks like a funding trade, but it's a decent sized trade. But the 2100s are $80. So how do you lower that? I mean, that's why it's just a little bit harder to play in these. But Google, if I'm looking at this, Google, I think trades from, it's made a move from call it 1700 to 2150. So it's 450. There's a line right here, 2000. So 2000 plus 450 is how much?
Yeah,
2450. So maybe it goes 2450. That's 20% from here. So that's just as a start, what I'd be looking at. 2450. How do I get into Google at 24.50, what type of call spread would I be looking at? If one lot's going to cost you $80 is going to cost you $8,000. Most people don't have that much to put in one. So, can I reduce it to $30? Can I find a call spread where I pay $20, $30 and have a 100-point range, 200-point range to make 2-3 times my money? That's how, you're supposed to look at these things. It doesn't matter whether it's a small stock or $20 stock or a $2,000 stock. The process is always the same. The only thing that changes is the price of the option. And so in those instances, you just don't want to buy any call spread. You want to find a good call spread, and you want to find a call spread that where you can take advantage maybe of some skew. In this case, the market is bullish here, so call spreads would be good here, right? Because you're selling. If the 3-month sentiment is bullish, means that the calls are bid, so that you would be the out of the money calls are bid. So here it's telling you that out of the money calls are bid. IV is sort of in a range, medium range here, and so you can buy almost the at the money, maybe a little bit further out of the money. So right around at the money, out of the money, right around that, say 5% out of the at the money, and you can then sell a way outside calls. That takes advantage of the bull sentiment in the 3-month sentiment. That takes of the skew. So bull means the upside calls are bid. So you want to sell them that, right? That's where the opportunity is. When that sentiment is way bullish, it's telling you people want calls, they want calls. And it makes sense. They want calls because they're looking at the same chart we're looking at. So when everybody's going in there bidding for those calls, that sentiment is moving closer to bull. We want to be selling those upside calls for some that's again, you're looking for an edge in volatility. That's how you would get a little bit of an edge in volatility in your strategy. You're going to buy, let's call it the at the money, buy the at the money, sell the out of the money, which is bid up, and it's shown by that 3-month sentiment. Does that make sense?
Yes, that's a great strategy. We're getting a lot of great feedback, so thank you.
Okay,
this is great.
So trying to step by step, little by little, we showed it once, people liked it, you made some money, great. Showing you again, trying to make sure we understand when and why we're doing it. It's not just on every trade, you're not just to look at anything and say, okay, I'm going to do this strategy. And let me make it clear. Let me just make it clear. There is no one strategy that makes money all the time. It's people always, there's a lot of people I see competitors say, this strategy is the one strategy you're going to use. This call spread, this put spread, this, straddle, sell this out of the money, this 40 delta, this. There's not one strategy. It's not one silver bullet that's going to, it's about understanding what I'm trying to teach you here, understanding how to use the board to your advantage. But you're going to need something, you're going to need a direction to really sort of give you that initial, this is what I want to do. I want to get long Tesla, or I want to get long Google. What do I do? So in Google, I wouldn't necessarily do the downside, sell that put. I would look for call spreads because you're taking advantage of that. I also like the chart, and I like the story advertising. We've been talking about Facebook. Same thing here, Facebook. We've talked about that for 3 weeks, which, by the way, let me do something here to show people something. Here, YouTube, let's just go to Options Geek. So you see my board, right?
Yep.
So here's the channel, right? So let's look at the channel here. Okay, so you can go here and just click on Facebook, and it'll pop up all the times we talked about Facebook here. And there's a lot of good stuff. It's not just me going, hey, I like Facebook. There's a lot of good analysis on why we're thinking Facebook is going up. So if you're new to the channel and you've missed some, don't be afraid to just go back and say, this is what we were thinking here. 3 weeks ago, Facebook stock setting up for a big move. Yeah, I mean, that's what we were looking at here, right? We're talking about the names here. Maybe they wanted to pressure that day. And then again, Facebook saying, look, like this is a big move here. But it's important to go back in time and sort of, I think this is where the studying goes. This is where you're going to learn the most, by going back in time and just listening to a 6-minute clip on why we were liking Facebook and what we were targeting, why the options flow we were seeing, and then again here, Facebook to explode after March 19th. And I don't know if,
what happened?
March 19th came and went. March 19th here okay, March 19th here, and kind of took off on March 19th, came back down, and now it's going back up to sort of this 300. So I think, we're doing this one to help people on a day to day, but there's a lot of analysis in all these things. You're not going to get this for free anywhere. I can tell you that much. I want to be honest with people. You're not going to get this for free. This is, this is a gift to Marco, and Marco's convinced me to do this. But this education stuff it's. I mean, you don't have to spend the $15,000 people are charging on the internet. I can answer any question just as well as anybody in the world, and hopefully I can do it better. But this type of stuff is good to go back in time. One, I would say, get the education so we're on the same footing, and I don't have to explain the basics. And so it's you get this education, this 3 steps, and everything I'm saying on the podcast is going to mean something. Give you 3 times the amount of sensibility of what I'm saying. It's just it's going to help you really understand what we're looking at. So I would really say to you, if you're looking at you like the trade, the strategy I just give you, that's one thing, but go through all these. Go through Facebook, next move up, and why I'm looking at these calls and not these calls. Why this strategy, and how here in Facebook, I still wouldn't use that put strategy here, right? Because, I'm always worried about the antitrust here and whatnot. But technically this looks like it's trying to break out here, and 300 was a level, and we calculated they were thinking somewhere between 330 340. So I still think it's valid. I still think that the trade is valid. It has done everything that we thought it might do, and it's trading up. Would I do this sort of collar trade right here? Doesn't really fit the rules of, hey, stock's got to be down first, right? So and IV's got to be straight up so that we can get, you just don't want to be selling these out of the money options, because if you get a big move, these things could explode. You get a move down, these things do explode. So you don't want to do that. You want to wait for certain times. So in something like Facebook, I would say that, for someone wanting to play it, maybe call spreads here, because we've had such a move, again, 260 to 3. We started talking about this right around here, 260, 265. It's now close to 300. There's 30 points out of the name. We're looking for another 30. That risk reward profile is now closer to, to being filled up at 330, 340. So, again, this is how we have to use this, and the frame. The beauty about what we're doing, and people should get comfortable, is the frame doesn't move. We're going to use the same frame whether we looked at it 3 weeks ago to today. Nothing has changed historically, but what that frame does over time is it starts showing you the different levels and your risk reward bucket, where you're saying, wow, we've come. We were thinking 70 points, 60 points, and it's already come 30, 35. The risk reward is sort of changing a little bit now. Okay, maybe calls are not the right play now. Maybe a call spread is a little bit better. Okay, so consider that, consider all these things that I'm saying. But I would also say, if you got 3 steps, there's so much good value in 3 steps, so much. I can't tell you. People see it, do it once, and they're like, oh, it was great. And I just say, go do it again in 3 months, go do it again in 6 months. Like, there's so much in there. There's so much in there that once you absorb it, and then you see it practically, and we can put it together, your options experience is going to go to a whole new level, just a whole new level, to be able to see things. And I'm not just talking about UOA. UOA is how we're looking for ideas and how it pops up. I'm talking about really developing the idea yourself and saying, okay, I may not want to do the call that the UA is doing. How could I do something that's a little less riskier for me, but still get some good bang for my buck? Okay, so exactly. We did a little bit more today in sort of education, which is hopefully helpful to everyone. I'll go back. We'll just say, look, you want another one here that we're looking at, that I'm trying to show you. Here, where were we here? Where's the, we put out a video on UMP. Boring, right? Boring. Railroads. This sector's hot. Boring. Gets 233 views. It's a joke. It's one of the better calls in the last month, but yeah, it's boring. It's on UNP, and we're in there trying to explain exactly why we like it, what's going on. The sector seems in play. There's a buyout. There's a huge buyout, which means big money, billionaires are looking at, how can we buy this asset and that asset, and what do we want to do strategically? How do we set up? When I say the sector is going to get hot, it's because I say that only because when there's a merger, the sector usually starts getting hot. People start looking at other assets, right? Someone buys, a piece of artwork someone buys a tweet for $2.9 million. Guess what? All the other tweets are up for grabs. Which one could I get? Maybe that's, I could pick up for $100 and it turns into 5 million. I don't know. But, that's what gets people's eyeballs. It's when a billionaire steps in and buys something and says, or a multi-billion-dollar company comes in and buys another billion-dollar company. They don't just wake up and go, yeah, maybe we should buy this. This is years that they're probably thinking, when should we buy them? When should we buy them? And then all of a sudden, bam, they come in and they pick up a big railroad. It's big news. It's big news. And then you start looking into it and you go, oh, I see what they're doing. And oh, they're getting ready for this EV infrastructure play. And oh, this is interesting for all the other railroads. Because what do you think? You think the CEO of UMP is just sitting there watching, going, oh, that's nice. No, he's calling up Goldman Sachs and saying, what do we do? Should we be doing something? Right. Goldman Sachs has got all their analysts trying to figure out. So when you see a takeout trade, pay attention. Start looking at what was going on. What's the dynamic for that? Is it because someone was just in distress? Maybe that's not a great takeout. But is it something that's strategic? And then all of a sudden you got to think, why? Why would the CEO come in today and buy that company? Why did they make that decision? And they weren't just thinking about it today. These things take months. And so what's been going on in the last 4 months? Clearly, Biden's infrastructure is going to develop a lot of, right in the heartland of America, a lot of movement. Things start getting hot there. That's how you start. That's how you pick up a trend. That's how you start seeing something. And then you're looking at the charts and saying UMP chart looks pretty good. I mean, that was a 5% move in a week. And these things don't move like that. That volatility on UMP was a 20 something. I don't do that in winning picks premium because the options were $7 to $10, and it's hard for most people to pay that. But I'm trying to show you, good sectors and good, interesting areas and pockets where you can go further and you can go do the research and you can go pick up things and hopefully share it with us. Hopefully, I'd love for people to come back. I mean, there are some people that send me an email and saying, this is what I saw. Here's a great article on this. And I love that. I read them and I say, this is great. We talk about EV trucking and I see Dwayne's always on and he sent me something. I appreciate it. I read it and I say, I like that. It explains something that I may not know. And I don't know. I'm not an expert in anything but options. I know a lot about a lot of different things, but I'm only an expert in options. I'm looking for people's help. Someone's a software developer. Someone knows about this. That helps. It helps not just me, but it helps the community and it's going to help us all get better. Right. And that's what makes a good idea. That's what's going to put together the piece of the puzzle for everyone. So that's my 2 cents. The podcast will help you by itself, but without 3 steps, it's just going to take a longer progression and you may not see the value. That I think to me, I know what's most frustrating. I know there's nobody in the world doing what I'm doing here for you. And what's frustrating is that when someone comes in and they just want where's it going? Give me is it going up or down? Because up, that's not what we do here. This is a thought process and a way to learn, and it's an extraordinary, valuable experience for you and for everybody that finds it. So let's make it bigger. I'd like to see more views on the work that we're doing here and what we're doing, and if we could share it and tell people what's going on. There's a lot going on here, and people pay. I know for a fact people pay $15,000 to $30,000 for education that you can get in a library for 35 cents. This education, you can't get that in a library. The stuff I'm teaching is actually brand new education, brand new topics. So I would say, and you get it here, you can get it for free by listening every day, or you can actually you get it souped up with the education and understand what we're talking about and go forward. So look, that's my rant for the last 15 minutes, but let's get back here tomorrow.
We love it. We appreciate it. And we thank you.
Awesome.
We'll see you tomorrow.
Awesome.
Thank you, Felix.
Good. Thank you. All right.